Welcome to today's episode of Ash Allen Talks, where we bring you insights from some of the brightest minds in business and finance. Our guest today is Avi Pinsky, a seasoned expert in revenue improvement and profit optimization. Avi is a public speaker and the driving force behind Pinsky Consulting, based in West Jerusalem, Israel. With a rich background in business and taxation, he is dedicated to helping business uncover hidden opportunities and improve their financial health. Avi's impressive academic credentials includes a Master of Business Taxation from the prestigious USC Marshall School of Business, where he was an ambassador for the master's program, and a Bachelor of Science in Accounting from Yeshiva University, where he had graduated magna cum laude and earned the Henry Broad Award for Superior Scholarship and Service in Accounting. Professionally, Avi has accumulated a wealth of experience across several high-profile organizations, held significant roles at KPMG Israel, including manager and senior on the US tax desk. His expertise has also been honored through positions at Gracie & Co. and PwC. Additionally, Avi has shared his knowledge as a tutor and had residences advisors at Yeshiva University. Today, Avi leverages his extensive knowledge as a recovering accountant to guide businesses in systematically mining financial information for actionable insights, improving their overall health and profitability. His skills in small business financial management, public speaking, and business consulting make him a valuable asset to any organization looking to optimize their financial performance. Join us. We delve into Avi's journey, his strategies for business improvement, and his vision for the future of financial consulting. Please welcome Avi Pinsky to Ash Allen Talks. Good evening, folks. You guys joining with me in Ash Allen Talks, and we're having a very important guest. If you are frequently listening to me, you already know Avi Pinsky from Jerusalem, Israel, and one of my friend actually, and we are doing my second episode with him, and we're gonna dive deep into the entrepreneurship and how the business works actually, and a lot of questions are covered at the previous episode, and this is the second episode, so we are diving more deeper regarding the business and the entrepreneurship. So Avi, welcome back.
Thanks for having me. It's always great to join you again.
Wow. Avi, with that spirit, I would like to ask one question. So we have discussed a lot in a previous episode, like a goods and service industry and how to running a business and the problems, and the business coaches use a term like 7, 8, 9 figures and the universal law, 5 techniques, and a lot of stuff actually that 35 minutes. But I would like to ask a question here again. How to identify a healthy business? And what are the matrices and what it's mean actually? Because everyone is running a business, but when it's come to IPO and all, people rely on the share prices and all, it's fine. But when it's come to small, medium entrepreneurs, so how they can find, okay, my business is running in a healthy way. So this is the right path. So I am doing it well. So how they can find, what is the matrices actually?
So it's actually relatively simple, right? If you just boil it down to what is the point of your business, right? Why does anybody have a business? And it's quite simple. They're in business to make money, right? They're in business so that they can fund their lifestyle, right? You're working so that you can fund your lifestyle, right? You're not living so that you can fund your business. You're working your business so that you can fund your life. So what do you need to fund your life? You need cash flow. Right. So if your business is producing a consistent positive cash flow that you can then draw from that business to fund your purchases, to fund your lifestyle, to pay your mortgage, to pay your expenses, your bills, your kids' tuition, whatever it is, right? Whatever you need for your lifestyle, then you have a healthy business. If your business is not producing that healthy, positive, consistent cash flow, there's something wrong there, and you got to get a hold of it before it, completely goes crazy and the whole tower comes collapsing down, right? But it boils down to that. Are you having a consistent positive cash flow that can fund your lifestyle? If not, the business is on life support, maybe even worse.
Wow. And I mean, regarding business, right now, the AI technologies are coming a lot, to be frank with you. And Nvidia stock is in a skyrocket moment right now, and it's past, I think,
Mhm,
surpassed $2 trillion, the company valuation.
mhm,
So at this point, a lot of people are thinking about the HR department, human resource management stuff, that they are trying to utilize more on AI technologies and reduce the wages and the salaries and all regarding it's a kind of a it's fine, it's a kind of a cost cutting approach to an entrepreneur. So what do you think
mhm.
about this shift, AI shift in hiring part?
I mean, it's certainly a valid way to cut costs. However, I think we mentioned a similar point last time was that you have to make sure that you're not sacrificing the quality in order to cut the costs, right? I've seen problems with AI some points, and it's a good start, but it needs somebody to be on top of it and review it and make sure that the things that it's spitting
Yeah,
out
yeah,
are accurate and are appropriate for your business. So I wouldn't rely on it 100%. It's a good jumping off point. It can save a lot of times on, rough drafting certain things.
yeah,
But at the end of the day, you still need somebody on top of it to make sure that it's okay, right? At best, it's like any other employee, right? You don't have a low-level staffer in your
mm,
HR department who's doing all the paperwork and everything by themselves. You have a manager who's reviewing it, right? So same thing with with AI. If you want to use that as your first rough draft, fine.
yeah,
But and maybe you can then cut a little bit of cost there. But make sure that you're not sacrificing quality to cut the cost, because that could end up coming back and biting you in the rear end and down the road. So it's just like any other cost saving thing, right? You
wow.
can cut costs where appropriate, but make sure that it's not that the whole picture is not suffering because of it.
Yeah. And when it's come to the business portion, Avi, the profit is very important and the cash flow is perhaps, yeah, it's actually very important. But the people
Most
always looking,
important.
yeah, most important, yeah, to be frank with you. And a lot of people are seeing the profit only. But real people know, okay, I having the capacity to generate the cash in future in 2 3 years. But right now, business is suffering, but they having a great vision and the mission in their mind. So when we seeing a business, when it's come to purchasing or acquiring a business, so actually, what point we need to consider from a business?
So if you're looking to purchase a business or start a business, you have to look down the road, what profit and what cash can it generate for me, right? And that's how you're going to determine the value of the business that you should be paying for it. Like you said, profit is very important to make sure that a business is profitable, but most important so that it's generating you the cash that you need to lifestyle. Um, yeah, the cash is the king, right? And in terms of looking at profit, a lot of times it's very easy, right? Your bookkeeper, your accountant can provide you with your income statement. You look at the bottom number, there you go. You're
Yeah.
profitable or you're not profitable. There's so many other things that go into it that the business owner needs to know in order to make decisions in their business. And
Hmm.
and most of those things are not going to be presented on that income statement or that P&L statement, depending on which
Yeah.
terminology you want to use,
Yeah.
right? How to bring in the sales, right? How many leads do you have? How good are you at converting those leads? Those things are not presented on your
Hmm.
P&L statement. What's your average client value, right? How much are you pulling in per client? That's not presented on your P&L statement. How much cash are you keeping, right? Some businesses will have a statement of cash flows, and that'll show you how much cash you're keeping. But if you don't, what's your account receivables balance? What's that doing for the amount of cash that's in your bank account, right? And it's good to have a bookkeeper and accountant that know what they're doing, but you need somebody who's can be on your team, who can express to you what the numbers mean for your business, right? What you can glean, what information you can get from these statements that can help you turn the ship, right the ship back onto its proper path towards the growth that you need. So it's important to not just focus on the revenue, not just focus on the profit, but really look behind the scenes. I'm not talking about digging into the minutia and getting everything down to the penny, right? That's a waste of your time as well, right? Because when you're looking to grow your business by, a couple thousand, 100,000, 10, $1 million, whatever, however much you're trying to grow it, those few dollars and pennies don't really matter. So you have to look. So when I say look at the numbers behind the scenes, look at the numbers that are really driving your profit, driving your cash flow. Not just what does it say on the bottom line of the P&L, but how did we get there, and how can we change it, right? How right now we got there to that $500,000 mark. How can we get that to 1 million, 2 million, 3 million, wherever it is that you're trying to grow it to? So having a good bookkeeper is important. Having a good accountant is important. But what's most important is having somebody that can speak to you, in plain language, right? Not talking, that accountanese where you don't really understand anything as a business owner. Because let's face it, you're not trained in finance. You're trained in performing the task that the business performs, right? So you need somebody who can who can talk to you in plain language and tell you what can you do to actually change those numbers to be more in line with your expectations for the company's growth.
Yeah. And Avi, when it's come to, and when you're saying actually the increasing the revenue and the profit, so the sales is a very crucial part for each and every business. So sales is, I can say, the heart of the business. So it's a main cash inflow to the company. So the increasing sales is a very important part. So the marketing team and the finance team, that is the point where they are keep fighting for the more budget for marketing, and the finance team always trying to cut off the budget. So at this point, so the marketing expenses, how it should be aligned actually, how we can, if we having a 1 million sales right now, we are trying for 2 million is like 100% target. So it's not an easy way. So how to narrow down the cutting the cost actually, at the same time sales should be higher. So how can management tackle this problem? This is a common problem in each and every industry. Yeah.
So, first of all, you got to get your team on the same page, right? You can't have one person pulling the ship here and the other person pulling the ship that way. Everybody has to understand, and I would hope most business do understand that you have to spend in order to make money, right? But the question is, how much do you have to spend, and how much should you be making on that? When I look at marketing expenses, I look at it, I don't care about the number itself, right? I don't care if it's 10 million, 10,000, $100, 20, the number itself doesn't matter. I look at it as a percentage of revenue, right? How much revenue did it generate, right? In relation to itself. Every additional dollar of marketing that I spend should be giving me a certain return on the revenue, right? So if I'm at $1 million in revenue and I've spent 10,000 on marketing to get there, if I spend another 10,000 on marketing, I would hope my revenue is going to double as well, right? If X amount of marketing took me this far, so 2X should take me twice as far. So that's kind of the way you have to look at it and see, it's not a matter of how much am I spending on marketing, but is the marketing justifying itself, right? And if I'm spending $10,000 in marketing on Amazon or on Google ads, and then I spend another 10,000 on something else, which one's actually bringing in more money? And then when I go for that next round and I want to spend the next 20,000, do I want to keep splitting it 50-50 between those two sources? Or is one of those sources bringing in more than the other? And maybe I want to allocate, maybe 15,000 to that one and only 5,000 to the one that's not bringing in the same amount. So those are the kinds of analyses that you have to do and see, am I spending my money smartly, right? I can't spend zero. If you wanted to have a business with zero expenses, great. You have no business, right? You're going to have no expenses, no payroll, no marketing, no overhead, no rent, no electric bills, no nothing. Great. You'll have no revenue as well, right? So you have to spend money to make money. The question is, are you spending the right money in the right places? That's the analysis that, again, the bookkeeper's not doing that analysis for you, and the accountant isn't doing that analysis for you, right? You need somebody on your team who's a quasi CFO to some extent, right? Somebody who's a chief financial operator of your business, right? It doesn't have to be somebody who's a full-time CFO like, Apple has and Google has and all these mega companies have. But you need somebody who can speak to you to the finances and say, this is the money that's working for us properly, this money's not working for us properly, and decide where to make those changes so that the business can spend the money that it needs to make the most, spend the least amount of money that it needs to in order to make the most amount of profit down the road.
Wow. And with that note, how much money a business should hold on? I mean, right now, a lot of people are focusing on AI stock or Bitcoin or cryptocurrencies and all. So normal trend now shifted from keeping the cash with them towards investing on cryptos, and it's highly volatile actually, and the liquidity also very high. If you invest 100 million or 10 million at least, you can withdraw the money like in 5 minutes. You can sold it. There is high demand and the supply is equal. So at that point, so how much money actually a business should hold with them, and how much should be invested on shares or something else? So what is there any actual ratios are there, or liquidity and all?
So it's going to depend on the risk tolerance of the business owner, right? When you're talking about investing in something that's highly volatile, so yeah, you can have big ups, you can have big downs as well. And so I like to look at my businesses, my businesses in terms of how many months can I cover if business were to stop, right? If all revenue were to stop tomorrow, the money that I have in my bank account, how long can I keep going before that runs out, right? And obviously we don't hope that to ever happen, right? We want revenue to keep coming in consistently, but we want there to be a couple months of a cushion, maybe 3-4 months of a cushion, so that if business were to stop, completely dry up, we'll still be able to feed the machine, to power the machine for a couple months, and be covered, be okay. In terms of investing in AI or technology, whatever, you have to think, what's the point of your business, right? Is your business an investment business, or is it a HVAC company, a contractor, a software company, whatever it is? Having those investments, again, it could bring in extra money on the side as needed, but highly volatile, you don't know if that's going to work. So if there comes a day where you need that money, are you sure that that's going to be there, right? I would say it's better to invest it in the actual core of the business as opposed to some ancillary income that might bring on, some return in the future, possibly. I'm not a big proponent of a business that's not an investment company to some extent, starting investing in elsewhere. Let's focus on one thing at a time. Let's build up this business, make sure this business is successful, this business is profitable, this business is bringing the cash to fuel our lifestyle. And if you want to take out a little bit extra in your owner withdrawal, throw some of that into the stock market on the side under your own name, fine. You want to start a separate company that does investments, again, let's not divide your time so much. Let's make sure this business is successful first. Once this business is successful, maybe you hired a CEO to run in your place, and you're really just a passive owner at this point. Fine, start another company, do investments, but really focus on the core of the business. Make sure the core is functioning properly before you start taking on side projects.
Yeah. And Avi, I have seen some CEOs or a COO or a top executive position people are actually not from a finance or accounts background. They are from, might be some kind of entrepreneurship or some kind of desire they have, and they're having their passion. So that's how they're coming into entrepreneurship journey actually. So this kind of entrepreneurs have just we will assume like they have like 1 to 2% of accounts and finance knowledge. And do they have to study finance and accounts, or how it works actually in the practical scenario?
You're describing every business owner, really. Most business owners, they're coming into it with no business knowledge whatsoever, right? They're the guy who they were a carpenter on a crew for 20 years. They eventually became, the foreman on the projects. And they said, let me open up my own carpentry. They were a plumber working for a business, and they said, let me open up my own plumbing business. Or they, Maybe they started as a side hustle. They said, I'm not
Yeah.
working on Sundays. I've got my neighbors occasionally are calling me for help. Let me
Yeah.
start charging them, $100 an hour to do it. And then that morphs and it builds up and it eventually becomes this bigger thing where, great, I could quit my job. I could do it myself. And they kind of fall into that ownership role. Unfortunately, they don't have any background, like you said, in finance or running a company. And maybe at the beginning, they're a one man shop, or maybe they got two of their buddies that are doing it with them. There's three people. It's not a big operation. It's not a big deal. There's not a lot of overhead that needs to go into it. But as the clientele grows, right, now they have to hire a secretary. They have to get an accountant on staff. They've got to get salespeople. They've got to get an in-house lawyer to write up contracts, and who knows what else. It becomes this huge machine that they don't know how to run. Right? They're not trained as a business operator or as a business owner, right? So yeah, that's exactly the problem that most people are going into, and that's why most businesses actually fail, right? 50% of businesses fail within the first
True.
5 years.
Yeah.
And that's exactly why. It's because the business owner doesn't know how to run it like a business, and cash suffers, right? The cash flow of the business suffers. So they don't need, I'm not saying that a business owner needs to get an MBA, right? To run a plumbing business, you don't need an MBA, right?
Mm.
Certain businesses, it might be helpful. But what you do need is some sort of basic knowledge, or you need somebody on your team who can help you with that knowledge, right? So I would suggest, getting some basic accounting 101 knowledge. You can get it online for free. It's not difficult things. Learn the difference between assets, liabilities, equity, expenses, right? Those, your revenue, expenses, just those basic terms, accounting 101 things, and get somebody on your team who can help you with understanding the implications of those numbers, right? So you're learning those numbers, you're learning what they mean so that you can understand the conversation, right? You're learning that accountanese to an extent, but have somebody on your team that can help you translate from accountanese into English, right? Somebody who can be that bridge between your bookkeeper, between your accountant, and you as the person who's the CEO, who's making the decisions, who's taking that leadership role. If you have that in place, you don't need the MBA, you don't need the 4-year college degree and the master's. You just need some basic knowledge so that you can be in the conversation, understand what's going on, and make the decisions that need to be made based on that information.
Wow. And Avi, when it's come to the business talks and all, right now we are talking about it. Some entrepreneurs and CEOs, they think the role of finance team or accounts team is to just provide the numbers and to show the directions only. So actually, what it's mean for finance team and the link between the owner. So what is the real link? It's actually providing the numbers and the directions, or it's a kind of an advisory role, or actually the accounts and the finance team is controlling the total business. How are you seeing this point?
So yeah, so having the numbers in place is important, right? You need accurate bookkeeping, you need accurate accounting, but the bookkeeping itself is not sufficient, right? The bookkeeping is all about the past, right? It's all what happened. You as the business owner should be focused on the future, right?
Yeah.
Okay, so the past is in the past. Let it live there, let it die there. But you have to figure out how to have a better future for yourself, right? So that you can churn out that positive cash flow. You can support that lifestyle that you need the business to support. So the driving factors have to be what's going to happen in the future, right? What can I do about the past to have a brighter future? But the past, knowing the past is important in making those decisions, right? Otherwise, every day you're going to be making an analysis from scratch and saying, should I focus on product A, focus on product B? What are you going based on, right? What are you making that decision? What's determining that decision for you? So you need to know the past. You have to know, how did product A, service A, how did that perform for me, right? What was I making on it in terms of, was it profitable? Was it a loss leader, right? And then based on that, I can say, okay, so going forward, I'm going to make a change to it. Instead of offering product A at $20 a pop, I'm going to start selling it at $50 a pop so that it's actually profitable. So there needs to be a balance between understanding the numbers and the numbers are driving the decisions, but ultimately it's those decisions that are going to impact the future that are going to make or break what happens in the business, right? What happened in the past doesn't make or break the future. How you apply it is gonna make or break the future.
Wow. And I need to ask one more question regarding the finance and account teams. So actually, a lot of people are used to spreadsheet, Excel, right? So
Mhm.
so right now we are in 2024 and we have AI and a lot of technologies. So still a lot of people are rely on this Excel and spreadsheet. So do you think is it a healthy movement, or is there any kind of innovation towards bookkeeping and doing the things sort out in a shorter way?
Yeah, I mean, I actually, I was months and months ago at this point. I was talking with somebody. I give a webinar where I teach people kind of the basics of how to understand your numbers as a business owner. And just again, giving that basic accounting 101 knowledge in 45 minutes to an hour. And so I gave this talk to someone was there, and she's very into automation, and she created this Airtable, which did a lot of analysis by
Wow.
itself, right? It took the Excels and put it into Airtable and spit out all of her margins and cash flow statements and everything that she needed to make the analyses. However, at the end of the day, you still need a person there, first of all, to make sure it was done correctly, right? To make
Yeah.
sure that the product actually is accurate, and then to interpret the data, right? You can use AI to generate those rough drafts, maybe get it to, I sometimes use ChatGPT just to get ideas on things, right? Sometimes
Yeah.
it'll give me, topics for discussions in certain scenarios. But at the end of the day, it's still the person that has to make that decision, and the person that has to do the final analysis and make sure that it's actually working properly, right? Sometimes the information that you're getting from the AI might be sufficient for the business owner to make the decision themselves. Sometimes you're going to need that CFO to step in and actually, do a little bit more further digging on those numbers and see what really is the area that has to be focused on and what changes have to be made. So again, it's a starting point. At this point, I don't think it's the end point yet. I think AI still has a ways to go. I mean, obviously, I'm not in that space as an expert, so my understanding is it's progressing probably daily at this point, as to how far AI has come. Each day is already the equivalent of
Yeah.
generation of advancement. But from what I've seen, it's still not there yet.
Wow. And Avi, I want to ask one more question regarding bookkeeping and the finance team and all. So I have seen, I don't know this appropriate question or not. Why? Because I have seen a lot of CFOs, right? Chief Financial Officers. Their age is like more than 50s and 60s. Why a young person cannot lead a company? And actually, this much of experience they are expecting from a person, or why this age gap actually?
Um, I would imagine you're thinking more in terms of those people in those big companies, those Apples, those Googles, those big companies that have a full-time CFO. So you want somebody there with experience who can really run a big team. At that point, you're talking about somebody who's really running more than they're running the accounting department, and they're running all financial decisions for the company going forward. So that's a completely different role. What I do personally is much more limited in scope. It's just trying to figure out what areas of a business have to be focused on in order to bring it to the next level. And that just needs somebody who understands the language, who understands the
Mm,
accounting, right? Again,
yeah.
accounting is the language of business, right? The numbers are the language of business. It doesn't take somebody who's got 50 years of experience in order to understand that and be able to explain it to somebody who's actually, to explain it to the leader and the person who's running the business. It just takes somebody who's got a little bit of experience in that basic knowledge. So that's personally, that's what I bring to the table. I'm not 50,
Yeah.
I'm not 60.
Yeah.
Hopefully one day,
Yeah,
but
myself also, because
at this
Avi,
point,
yeah, I'm sorry to interrupt.
yeah,
Because
yeah,
I was thinking some older companies actually, this Apple and Google and all, the CFOs and all, the age gap is like 60. After 70s, they are getting to that position. So I was thinking, why
yeah,
a young generation person, young guy cannot control this whole economy of the company, and CFO position
yeah.
actually can, but I feel like some kind of maybe office politics or something kind of getting the position. I don't know, but I'm sorry to
Well,
comment on it anyway. I'm
no,
sorry, Apple and Google,
there's
but
certainly an expectation.
yeah,
There's certainly an expectation when you're talking about those huge companies that the people in management are going to have a certain level of experience.
yeah,
But most business owners, that's not needed, you know?
yeah. Very good example is Meta. You see the Mark Zuckerberg, who's a very young person, who is the CEO, and Elon Musk,
Mhm.
right? So these guys, right, hiring team is hiring all young people and running a company in a perfect way. But the older company still stick to that. I don't know what's happening inside the company or in a shareholder meeting and
Yeah.
all. Maybe I don't know. But but what
Maybe
I yeah
internal politics type of
yeah.
thing at that point.
But I feel like if a young person is handling that position, he or she can run that company in a very clever way with the new coming innovations and the new accounting
Yeah.
ways and all. I have no idea regarding that one. That's why I raised that question, Avi.
Yeah. Yeah. And I would imagine that's, why are the CEOs also that age? Do they have to be? I don't think so.
Yeah, and Avi, we are near to exit anyway. The time is very crucial. We have talking about the finance, accounting, and a lot of things actually for 35 minutes right now. And I want to ask one advice to SME, small and medium entrepreneurs, how they should
Mhm.
align their accounts and finance, and is it a good way to hire a new accountant into a business or going for a third party, or how they should decide on this point?
So in terms of hiring, uh, again, accountants, every business needs some sort of an accountant, right? In terms of hiring versus using a third party, that's going to depend on the size of the business, right? If your business is not pulling in, $5, $10 million, I wouldn't necessarily say you should be hiring an in-house CFO, right? A full-time CFO. That's going to be a big expense for your company to swallow. Um, in terms of accounting and bookkeepers, so maybe those numbers might be a little bit different. But in terms of a CFO, once you're at about maybe $500,000 in revenue, you should start thinking about it, right? Definitely start thinking about who can I bring in on a part-time basis, right? On maybe a fractional basis or outsourced CFO who can help me grow from that 500,000 to that 5 million level. Once you're at 5 or 10 million, so then I would say, okay, it's time to bring in somebody in-house, somebody who's full-time, really focused specifically just on our company's growth. If you're really just starting up, you're making a few $1,000s a month, maybe 100, 200,000 a year, it's important to have somebody who can help you translate those numbers. But it doesn't necessarily have to be somebody who's coming in on a regular basis or routine basis. It could be maybe once a quarter, maybe twice a year, just to see what are our goals this year, how do we get there, and are we going to be getting there, and if not, why not, what can we do differently. Once you get to that about 500,000 level, I would say you need somebody who's doing that analysis a little bit more frequently, maybe on a monthly basis. That's what I do with my clients. I mean, monthly, and figure out, are we on track to hitting our goals? If not, why not? And what can we do about it? And then once you get to that 5 million, 10 million, so then you need somebody who's full-time, who's focusing on it more than once a month. Maybe, they might be running those numbers every week, every 2 weeks, to really see, where the roadblocks are for growth.
Wow. And Avi, I need to ask one more question regarding this. Avi,
Yeah.
what kind of companies or production departments you can control?
So I can, the beauty of the system that I use is that it's all based on basic financial accounting numbers, right? And those things are universal across the board, no matter what company right? There's going to be certain expenses in some companies that aren't in others. So, if I'm dealing with somebody who's in manufacturing, they're going to have an inventory expense. If I'm dealing with somebody who's running a law firm, they're not going to have an inventory expense.
Yeah.
So there are going to be certain differences. But in my experience, all businesses can be boiled down to at maximum 15 numbers, right? Those 50, some of them are going to be maybe they might only have 5 of those numbers that are that are active in that business. Some are going to have 14, maybe all 15. But since you can basket all the numbers into one of these 15, you can apply the system across the board, right? So again, whether you're talking about an HVAC technician, a plumber, an electrician, or a doctor's office, a dentist, a lawyer, really anybody can use this type of system to grow their business. So, again, me personally, it's really industry agnostic. I enjoy more working with home services types of entities, like I said, those plumbers, those contractors, pest controllers, those types of things. But I've worked with doctors as well, and it can be just as beneficial for a doctor's practice as it is for a plumbing company.
Wow. That is Avi from Avi Pinsky Consulting and from Jerusalem, Israel. And Avi, thank you very much. There was a very, very valuable inputs we have given today. And thank you very much for your valuable time. And all the listeners, and all the listeners, I will leave the description and where you can find Avi in the description below, actually. And thank you very much, Avi, again.
Pleasure.